Welcome to Illuminati Silver. We tell you the truth about silver. Today is Friday the 6th of September 2019, and we're taking a brief look as to why silver prices fell yesterday from $19.50 to $18.64, and today a further fallback to $18.30 as we produce this video. So here goes. In last Saturday's weekly update, when silver was $18.37, we concluded with the following words on silver. Quote, "We would not necessarily be buyers at this level even though our last two videos have predicted higher prices before the end of 2019. But we do feel that buying has been a little overextended and are expecting some pullbacks, certainly towards the $18 level, and more than likely back towards $17.50, though there may be another 20 to 30 cents in the price before this happens." Unquote. Well, with the China outlook ever more bleak, as the US refused to pull back or delay the sanctions which were imposed on the 1st of September, with Iran beginning to raise its head again with more interaction on the high seas, and the pumpers en masse began sending out emergency newsletters and videos that $30, $50 and $100 silver was on the immediate horizon, we saw a sudden surge in the silver price after the Labor Day holiday, peaking at $19.65 on Wednesday. Now, before we continue, just for information, on Tuesday we bought 20 ounces of silver on eBay and produced a video showing how you can buy silver below spot in a rising market, which we then published on Wednesday, for the benefit of subscribers who were new to this technique. We received quite a few positive comments to that video, including some warnings what to look out for and other suggestions which subscribers have themselves experienced. So we suggest please that you visit that video and read the comments also, as they were most helpful, and we've put a link below. Anyway, back to what's happened to silver. Well, firstly, from a technical analysis point of view, and as we stated on Saturday, even at $18.37, silver had got ahead of itself and was due a pullback. So you can imagine what that meant when it actually hit 1965. Now, we admit we did not expect silver to jump over $1, but we did expect a 20 to 30 cent rise before the pullbacks occurred. But it has now fallen back within the space we were expecting, and are expecting it to fall a little further. Secondly, there's been some good news, read the China trade talks, in that it has been reported that they will resume again in October. Thirdly, the Hong Kong controversial extradition bill has been withdrawn, and China has supported its withdrawal. So whilst the problems are nowhere near over, a reduction in tensions is likely. Fourthly, the Brexit fiasco has potentially led to a bill being passed which prevents the government from choosing a no-deal Brexit, which is what markets fear. Now, we see problems with this ourselves, but as far as markets are concerned, they view it as another potential removal of anxiety. Fifthly, robust US data yesterday on jobs and services has assuaged fears of an imminent recession. And sixthly, there has been suggestions from some European Central Bank policymakers that it's not yet time for the ECB to start buying bonds again. So, whereas at the end of last week and the beginning of this week there was doom and gloom, now towards the end of the week, matters do not seem as bleak as originally anticipated, or at least for now. Add to all this a reasonable dollar index of 98.4, although it has been over 99, the Dow rising by 374 points yesterday, and the S&P rising by 1.3%, plus all Asian Pacific markets in positive territory, and most European ones. The fear factor which our friends the pumpers have been revelling in lately, as slowly, perhaps not dissipating, but not proving as imminent as they would wish you to believe. Okay, so what does this actually mean going forward? Well, in tomorrow's update we'll give a more comprehensive answer, but for today we have to wait for the non-farm payrolls, which are quite a few hours away from the publishing of this video. In July, 164,000 new jobs were created, and it is expected around 170,000 for August, which should prove to be the magical figure. And since there were strong ADP employment figures published yesterday, plus a rise in unit labour costs, it is expected that the non-farm payrolls will be positive. Now, if they are stronger than 170,000 by a good margin, we can expect to see gold and silver prices fall further. If they are weaker by a good margin, then they are likely to rise. And if they are as expected, we still see a slight deterioration or pullback in prices, but markets will remain cautious until the Fed's interest rate announcement due on the 18th of September. It's generally anticipated that the Fed will reduce rates by 25 basis points. But this may upset equity markets, which are anticipating, and to some extent factored in, a larger cut. But that is for another day and another video. Meanwhile, keep your eyes peeled on the data, and also Jerome Powell is speaking later today, and so his comments are also worth listening to. Also, please bear in mind that there is a raft of data being published next week, but we shall alert you to this tomorrow. Thank you for listening. And by the way, for those of you who are on Discord and are members of our Inner Sanctum, we're now placing the various podcasts and videos on Discord as well as the website. Obviously, you'll still need to be a bronze or silver member to access them, but it's another route for you to reach and listen and read the material. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.